Okay, guys, a quick one here. So I'll be talking about re-entries, how after a missed trade. So for example, you wake up in the morning and when you check your chart, you discover that you have missed the move, maybe during your session, or the move actually started or happened during the previous sessions, and you were asleep and you missed that move, right? So I'll be teaching you how to catch re-entries after missed trade, or after trades, or on trades whereby you feel that there is no longer opportunity. A lot of people jump and follow candles, and which is very very wrong. For example, market is moving, say market is consolidating, then all of a sudden market just pumped, right? You saw a massive green candle or a massive red candle, and some people, because of the fear of missing out on that move, right? Market does something like this. You just saw a dump. So because of the fear of missing out of the trade, right? You see a lot of people looking at that candle and they'll be like, "Oh, market is dumping. Market has made the move," and they will go to their exchange or whatever platform they used to trade, and they will rush in and just enter market price, right? But they don't know what. If you understand market structure, you never take trades like that. You might be lucky one or few times, right? But you know that whatever trend the market is, right? You guys have we talked about trends, uptrend, downtrend. Okay, whatever trend the market is moving, it does not move in a straight line, right? You see market moving in an uptrend and in a downtrend. That's how it moves, right? Creating internal structures and substructures and external structures as it moves. So whenever you see market creating that aggressive move to the upside or the downside, you don't panic just because you want to make money or just because you want to catch the trade. Then you'll be like, "Oh, this guy has left me. Market should not leave me. I've been waiting for this and now he just left me," and you just go and enter market price, right? And for market to make that move, is either maybe it's a news or volatility, or there was something that just happened whereby the market will just make such aggressive moves and you just go and enter halfway. Then what happens? You see market coming back aggressively again. Hunt your stop loss. Hunt your stop loss before continue in the on the other direction, the direction market wants to go. And you entered, you chased price, you entered around this region, right? Just because you saw the market. Then all of a sudden, market just stopped halfway and make an aggressive sharp move, then sharp dump again, right? Then you'll be stopped out and you start crying. So the best thing to do in that scenario is to have a cool off and look at the charts and understand market structure. It means if market has created that move, right, it's likely not to continue, right? This is discipline that traders should have. It's not a must that market must make a pullback. Okay, so if you have missed a move, you have missed that particular move. But what do? You react with the previous structure market has created. For example, if market has shifted like this with a breaker block, right, and is going aggressively, instead of just entering it, smart trader would what? Would just mark it out their point of interest while waiting for market. Should in case, right, they will now be positioned somewhere here. That should in case market, since it's dumping aggressively or pumping aggressively, should in case market wants to just pull back a little to stop those fear of missing out traders, it will just tap into your POI and dump aggressively, and you'll be in profit. You take profit at the previous low, right? We've seen that happen. I think something like that happened recently on the charts, where you can see something like this happen. This is ETH. Market was doing moving a form of consolidation. Then we saw an aggressive dump, right? You saw an aggressive dump to the downside. Now, when market made this aggressive dump, right, you see lots of traders will panic that, oh, they have actually missed move, right? They will panic that they have missed the move. Then all of a sudden, within that same, where is it? Mm-hmm. Market was just dumping. Let me take it to 1 hour time frame. Okay. Some traders will panic that, oh, market, they have missed the move, they have missed the move. Then all of a sudden you just saw a reversal, a sharp candle coming to tap this particular order flow region, and a continuation, right? So instead for you to panic that you have missed a trade, position with the reaction price has created previously. Position yourself for any opportunity, right? So a lot of people actually caught this trade because why? They did not panic when they dump outside this range happened, right? When markets left this range and dumped aggressively, they did not panic, right? They waited for opportunity for market to pull back into that same range where the move started from, right? Because you know that, oh, there'll be a continuation, and all of a sudden the market entered into that region and dump aggressively. This will be opportunity to catch beautiful trades using what? Order flow. So now, what is the easiest way for you to catch a continuation trades if you have missed entries? Order flow can help you, right? If you have missed a particular entry, order flow can help you catch a continuation, especially when the market has changed direction and is moving the other way. You don't panic and enter market price. Market is dumping. Short. Market is longing because you saw a bullish candle, boom, pumping aggressively. Then you panic and enter. No, it might be very, very risky, right? It means you're not actually trading. As long as you didn't catch the initial move where market pumped or dumped from, what you're doing is not trading. What you're doing is you're gambling. For example, this impulsive move here, right? This impulsive move here, you can see how market was really moving slowly. If you had not catch a particular PO high here for you to enter the trade, right? If you do not catch a particular POI, you're not convinced on a particular setup for you to enter a trade around it, and market started pumping, it will be an error for you to say, oh, this market is going, let me just enter. You might be lucky. You might be lucky few times, but that is not trading, right? If you do not catch the initial move, you wait for a re-entry. If market does not provide an opportunity for a re-entry for you, then you have no trades. It's as simple as that. You wait on to the next one, but you don't want to become what English will I use, stubborn, or you're not disciplined, indisciplined, to now say, oh, because you saw this aggressive move, there's no pullback, there's nothing, you just saw market moving aggressively, then you just enter halfway, then you'll be looking at the market. If it's not in profit, you want to close. No, 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 no. It means you are not following a particular strategy, you are not following a particular system, you're not a disciplined trader, you are just gambling, right? So if you missed an entry, you wait for market to pull back to the order flow. Is it compulsory that market will make a pullback? It is not. We don't know. For example, when market did this aggressive move, right, there were lots of supply zones, though the trend line has been broken out, has been taken out, right? The trend line has been taken out, market just went aggressively, though there were lots of supply zones here that would have at least, even if it's not to change structure of the market, would maybe create a form of reaction, right? To maybe for a pullback. But what happened? Market just went aggressively to take it without any pullback. So there might be situations like this, but it does not mean, it means you have missed the move. It does not mean you now want to enter halfway just because you know that, oh, market has swept this, let me just enter. No, 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 no. Have a precise entry point for each of your trades before going into the trade. Don't just go into it like this. Now for this scenario now, we did not see any pullback. For this scenario, when market dumped, we saw a pullback. Okay, so this is how you trade. Don't just because you see a candle, you want to gamble your way in and out of that candle. Market will always create opportunity if you missed it. Look at this dump, right? Say you did not catch, right? Say you did not catch the move from this particular order flow. When market pulled back into this order flow, you did not catch the move to the downside, right? Then when market is coming back, you see it actually moved into this particular order flow without even taking it out, right? Market made a pullback from this dump into this order flow, right? Add a range inside there. That would have been a lot of time to test your patience. Then came back down, and you saw how it took out this low, the previous low it pumped from. Okay, so this would have been an opportunity to catch this trade from this region. That's how beautiful market moves. Beautiful. Okay, so you just have to wait for that opportunity. And if you're trading SMC and you want to be a good SMC trader, then of course we have talked about the virtues of patience, how you need to be very very patient and allow market to play, right? You be patient to wait. So imagine you had opportunity for market to move into the order flow and market started ranging, took a while before market made the move to the downside. That would have been an opportunity for you to take a trade, right? To be patient to take a trade. So that is just I don't know if you can see some few more examples. This scenario now, no pullback. This sell side scenario, we saw lots of pullback for a continuation trades. So you can back test your charts. You would see, okay, look at this region. There was an aggressive movement. Market came back down to the order flow, right? So order flow are just the best thing to use, right? The best thing to use. So in the zone of the order flow, you can now analyze to get a sweet entry point, right? But that zone, you can see when market pull out from this region, market still came back to the order flow region to buy, right? It didn't just buy automatically. We had a few range, but market did not actually break the order flow since the structure is bullish. Maybe you would have seen the structure being bullish on a higher time frame. So when market was pulling back to the order flow, it did not take it out, right? To catch a continuation move. So if you have missed the move, right? If you say market was around this zone, let me do it like this. Say market was around this zone and you saw that shift right here, right? And of course you saw this candle, there was liquidity here, market came back to the imbalance here, swept this liquidity, tapped into it. So this sweep, right? I think you see that even more clearly on lower time frames. So after this sweep, market pullback. So say you missed this move and all of a sudden market just start pumping, right? Someone that doesn't have patience or don't have discipline of always having a setup before they go into trade, right? Always have it. So don't just wake up, look at your chart, and you see candles pumping and candle dumping, and you just long or you just short. You're not trading, you're gambling. Okay. So if, for example, you miss this move, all you just need to do is to be patient, right? Oh, I've missed the pump to the upside, and you patient. Order flow can help you. In this scenario now, order flow helped for the continuation. If you don't know what order flow is, we have done 3 videos in the past talking about it, right? Order flow helped for this continuation. So what do you need to do now? If you know you're that kind of trader that don't have patience, that your emotions, the fear of missing out always get to you when you see market pumps and dumps aggressively and you do not catch that particular move, what you need to do is to go to your charts, right? And go and back test. Go to all regions where you see impulsive moves, up, upside or downside, and test which one actually after market make the impulsive move, how many, right? How many times does market actually come back for re-entry? So if you know that markets always come back for re-entry, you would now know that, oh, you need to be patient. You will not be taking aggressive trades like that anymore because of fear. Because why? You have seen it several times that sometimes the character of the market, after making such impulsive moves, it will always give you another opportunity to catch a trade. Now, this is not because Smartex says so. This is because you have seen it yourself in the charts. So study, right? I think I will talk about the importance of studying your charts and how to actually carry out that study. Some of you don't know how to do the study. I think I will create a video session for that. So that's that for that, guys. See you on the next one. It's just, yeah.